Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, I have been telling you something day after day. In fact, I think for the last 2 weeks, I've been putting this out in front of you, and I've been telling you, don't fall in love with the upside. There are very many technical reasons and fundamental reasons why this market has a lot of weight to it. There is a lot of weight on the stocks right now because if dollars continue to go down and gold and crude continue to go up, they automatically push the price of the stock market down. If you have a stock or if you're a company, and even if you own shares in your own company, they're automatically worth less as the dollar drops. Now, the Fed this evening, Sunday evening, cut the discount rate by 25 basis points unannounced, and it's starting to tank our markets. Traders, I got some charts I want to show you right now. I think you will understand both the technical and fundamental reasons why this market has no choice but to go lower. Let me take you to those charts now. I'll be right back to you. Okay, traders, the first chart I want to show you, and I have shown this chart to you, I don't know, 4 or 5 different videos leading up to this one over the past 2 weeks, and I have made a case about the S&P technically, and I have said that we have the exact same formations happening over and over again. This is the June S&P. Now watch what happens here. The market rallies and puts in a high, drops down, puts in this low, and then puts in a secondary high lower than the first, and what starts to happen is we have a big break. The next thing it does is it stops cold and it puts in a high, drops down, puts this low in, almost looking just like that, runs back up, puts in a secondary high, lower than the first low, and proceeds to break down. 2 times in a row. You know what, traders? You don't need to show me something more than twice before I get it right. What happens next? The market rallies, puts in a high, drops down lower, puts in the low, puts in a secondary high. What do you think should happen next? My bet, and what I've been telling you all along, is the next move to be made is lower. And I think this time we take out the previous lows of 1268 that we made on Martin Luther King Day when Societe Generale had their rogue trader and the markets got washed out. We will take those lows out, traders. That's here. We will go lower than that. This move is real, and there are real reasons why it has to continue to go lower. Now, while this was happening, oddly enough, we were using a parabolic SAR on this chart, stop and reverse system, and it would show a bunch of dots here, and then when we put in the secondary low, you would get 4 dots, and then the drop would come. And then we put this low in, and you got 4 dots, and the drop came. And then we put this low in, and you got 4 dots, and the drop began. We are not finished with the downside of this market based technically on what you see here. Let me show you some other reasons why you should likely be looking to sell rallies and don't fall in love with the upside. Okay, traders, this is the NASDAQ chart, the June NASDAQ, and it has been stuck inside of this almost parallel channel, hitting top and bottom, but we have a previous low, and then we broke that previous low not too long ago, had this little rally for a few days, and now we will take out the downside of this channel. Likelihood is the next test of the channel when it goes back up will be a short, and then we'll really begin to descend in the NASDAQ market. Of course, the NASDAQ, like the S&P, is made up of individual stocks, and those stocks are becoming worth less every day the US dollar gets hammered and the gold and crude move higher. So this will move lower just as the S&P, as will the Dow Jones and the Dow Jones Transports. Now I'm going to show you a couple of charts, the opposite of what you're seeing here, what is leaning on these markets. Take a look. Okay, traders, this is the gold, the April gold chart. This is a daily bar. As you see, this has been a raging bull straight up. And you know what, traders? Any traders that don't know whether to call a bull or a bear, you can't get this one wrong. Any chart that starts at the bottom left corner of your chart or on your computer screen and travels all the way to the top right corner, if that's not a bull market, I don't know how to call one. That is clear as day that we're in a bull, right? Now, if you're in a bull market in gold and it breaks to levels no one's ever dreamed it would get to, it is putting pressure on the dollar index. The gold has just now broken out of this channel tonight, Sunday evening, when the Fed decided to lower rates unexpectedly. It is above. It traded as high as 1023.5. Traders, who ever dreamed of gold at $1,023 an ounce? I was on the floor. I never seen it get past $500 an ounce. It has doubled since I left the floor and started this site. That is an amazing run. This is putting pressure on our dollar and our stock market. Now let's look at some more interesting charts. Traders, the next chart I want to show you is the June dollar index. And you know what? You don't need much to figure out what type of market is this, bull or bear. Look at the way it just breaks down, stuck inside of another parallel channel, which is opposite of the one you seen on the gold chart a few moments ago. If gold continues to go up, they will batter this US dollar. As they lower dollars, I will say it again, traders, stocks automatically are worth less. If you can't figure out which way the S&P is going to go, look at the dollar index, look at the gold, and look at the next couple of charts I'm about to show you. Okay, traders, this next chart, just to bring that point home, this is gold in the blue. This is the dollar index in the green. As the gold moves higher, it forces the price of US dollars to be worth less. That is a fundamental and, as you see, a technical reason why you should be selling rallies. And I will say it again and I won't stop. Don't fall in love with the upside here. Sell rallies in the S&P until this environment changes. But you see clearly gold and dollar index in the same exact opposite channels, doing the same thing, only opposite one another. Gold breaks out to new highs, dollar breaks down to new lows. Traders, there has been an all-out rout on the US dollar, and it will not stop until the Fed stops lowering rates. Okay, traders, the next chart I want to show you is more of a reason why you need to realize that the S&P will go lower, the stock market will work lower. You are looking at now the price of crude oil. Look at the price of crude. It is above $110 a barrel. Traders, when I started on the floor, crude was, I don't know, $6 a barrel, maybe $5 a barrel. It is $110 a barrel now. Look at the inverse of that. This is the S&P. This market right here is S&P. As the crude continues to rally, the S&P begins to break. Now the S&P is challenging those lows from Martin Luther King Day, as I expressed to you a little bit earlier, and we are likely to take those lows out. But if you keep looking at this the way the inflationary markets are moving higher, being the gold, silver, the oils, the metals, as they all move higher, and the grains included, it absolutely pushes the price of the stock market down along with US dollars. This stock market is well below a 200-bar average. It will continue to break down, in my opinion. Rallies will need to be sold here. And again, that Societe Generale low, or Martin Luther King Day low, was 1268, if I remember correctly. And I think we take that level out and continue to the downside. Traders, pull up your own charts, do your own homework, and check it against what I've shown you here. But you've seen technical and fundamental reasons why the S&P has to go lower, looking right at the charts I've shown you. And traders, I've said this a dozen times at least, probably 24 times. The technicals, or I should say the fundamentals, always show up in the charts first. There is your proof right there. Traders, so you've seen the charts? You see what I tried to show you there? I have been showing you that S&P chart day after day. I show it in my classes every day. When we hold a class, I pull that very same chart and I tell the Omniacs, I know it seems redundant, but this is what's happening right here and right now, and we need to go over it every day so you're prepared for it. Traders, this is a very sloppy but illustration of that very same chart. And I showed you how it worked in this pattern. It rallied up, put in a lower high, proceeded to break. did it again, put in a high, a low, a high, and proceeded to break. The one that we're working on right now has put the high in, the low, a high, and has begun its descend, just like it did with this one and with this one, like it's going to do here. And that was literally the fundamentals coming out in the charts way before anybody realized it was going to happen. So I kid you not when I tell you the fundamentals always come out in the charts first. Traders, if you'd like to learn how to do this sort of analysis for yourselves, come on down to www.livewithoscar.com and jump into those chat rooms and join the Gold Class membership, or better than that, come to my premium room and we will be able to help you learn how to do this for yourselves. Traders, I didn't make this up. I showed it to you day after day. I didn't make up any of those charts. They make themselves up, and if you learn how to read them well, I assure you, your trading will get better and better. Now, what do we got for tomorrow? Of course, we got a red Omni, right? What would you expect with a red Omni here? The Omni is red for tomorrow, and I think we go straight down without any breaks. Yes, you'll get a couple of rallies, but I think down is where we're going to have to go. And again, we're going to take out those lows of 1268. For tomorrow, we're hoping for some kind of a rally to sell into. I'd like to see this thing get into the mid to high 1320s. If it gets somewhere near the 1320s, you're going to sell it up there. And I expect a serious breakdown to the 1260s, traders. From the 1320s down to the 1260s. Below the 1268 level, that's what you need to expect after the action that I'm witnessing here and the charts that we've gone over. That's what the market is telling me now. So that's what I'm telling you, and I want you to do your homework on this, traders, because you can't just listen to me. You never know if I'm a nut with a magic marker and a whiteboard. I don't know what I'm talking about. So do your own homework and make sure that you compare your work to what I've shown you here, and if it looks the same, think about taking that recommendation again. 1320s, if you get up there, you sell them. If it gets down into the 1260s, get yourselves out and thank the stars above if something like that could actually happen for us. So get ready for it. Traders, I tell you this all the time. We put stops in certain places in this market. Never, ever, ever trade without a stop. If you'd like to know where the stop belongs on this trade, again, come on down to our site. Join one of the memberships, join a Gold Class membership or higher, and you will get the exact stop, the exact level I want to get in, not just an area, and the exact profit level. So make sure that you come on down to the site, traders. I tell you all the time, don't try to trade alone. There's an army of us Omniacs out there, and we're in the rooms every day to help you traders get this right. So come on down to the site, become one of us Omniacs, and learn how to get this right, or at least learn how to read the charts better for yourselves. Traders, if you like this video and you like the techniques I've pointed out to you here in these charts, or at least the way I'm giving you to look at the analysis, because that's what I really did here. I didn't show you many techniques, but I did show you a broad way to look at one market versus another and what that means. And that is part of technical analysis. You got to look at the whole picture. I like to call that looking at the forest as opposed to the trees. First, I look at the forest like I'm in a helicopter above it, and I figure out which way the forest goes. Then I do my analysis and figure out where the path in the trees I'm supposed to take each day to get to the end of the forest. And that's what you need to do. Look at the big picture first, and then look at the small picture and figure out how to trade. So we have, Mike, 286. We have 286 videos, a lot like this one, with a lot of chart techniques for you to learn from. They're sitting on our YouTube page. It's www.youtube.com/futuresanalysts. When you get there, subscribe to our videos so that you get notified by YouTube the moment we put a video out. Traders, anyone that sent me any emails, you know I've sent back every email, right? You guys see me for the last 20 hours of my life.
Good job.
Thank you. I got back to every single email, just like I promised. Please send me your emails. Shoot them out to Oscar@futuresanalysts.com. I will certainly look at your homework, evaluate it, and send you back a reply on what I think about your work. Traders, you can always call us because we are here 24 hours a day, and we have a new addition to the staff. Somebody else to be here to help you Omniacs get through this rough and tumble market. Give me a call at 702-629-4755. Traders, keep your emotions out of this thing, because let me tell you, the way that thing is whipping around like now, the way it is right now, tomorrow is going to be very emotional for you traders that don't know how to control them. And when that thing whips around, if I expect this thing to go 50 points, if it actually moves that much, you can really get chopped up if you're not thinking correctly. So keep your emotions out of this. One of the best ways I can help you do that is to tell you to say this to yourselves every day. And you know what that is? Stops are in. Emotions are out. All right, that was good, guys.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.